News today. Supply chain software startup Pando has announced Series B funding of about $30 million. The Chennai and Silicon Valley-based startup now has a total funding of $45 million, with plans to deploy this money in building forecasting models and global teams. In an exclusive chat, Pando's co-founder told my colleague Jude Sannith that the startup plans to break even by the year end as it targets threefold growth in the same period.
All of the problems that you mentioned have existed from before. Labor shortages, inflation, port congestions and all of that. But they're really more pronounced now because of the recent geopolitical uncertainties, the pandemic and all of that. So I think in terms of just technology investments, I think companies are going to double down and now realize that supply chain risks are more pronounced now and they have to invest in these spaces. Pando digitizes, optimizes and automates the order to fulfillment process. So it's hard to say that we will focus on this product or this area, this module, versus just looking at the entire platform. So we will double down on making every order, every transaction as efficient as possible.
Right. And even as, Abhi spoke about doubling down and how companies are in this mood, so to speak, even as we've seen disruptions in the last few years. Nitin, I have to ask you, you are clear on where your position lies, and that is the enterprise space, insofar as developing this technology is concerned. What kind of growth prospects do you see for the business in these areas? What's that growth number going to be like going forward?
Sure. You're right. I think Pando has been focused on the large enterprise from day one, and I think in that way we are unique and hopefully have an advantage in the long term in the global markets. And so if you look at our customer base and and talking about growth, I think we've grown about 2.5 times in the last year. We've grown between 2 to 3 times every year for the last 4 years. From our first customer, which was a Fortune 500 manufacturer, to the last customer last week, or the latest customer last week, they've largely been very large Fortune 500 manufacturers, distributors or retailers. So our focus on large enterprise will continue. In the coming year to 18 months, 12 to 18 months, we're projecting about 2.5 to 3 times of growth. We'll continue in that ballpark, but also in this macroeconomic environment, I think, not just big businesses, meaning big growth businesses, but good businesses, meaning high profitability businesses, will get built. And it's not a trade-off between good and big. Great big businesses will get built, and we're hoping to be in that fourth quadrant of high profitability, high growth businesses.
Right. So what's the revenue outlook going to be like? And when do you turn profitable, in a sense, given the fact that there's clear focus on that aspect of business?
Sure. Today, as of today, we're close to about $5 million in revenue. We're expecting that to go between $12 to $15 million in the next 12 to 18 months. We are at about 1:1.5 of what they call burn ratio, a metric in SaaS, which is for every dollar that we earn, we spend about $1.5 in spend. By the end of this year, we'll be at 1:1, bringing us closer to a break even. So I think we'll stay focused. I think so. The theme in general is focus, prudence, and velocity for growth, rather than dispersing resources, energy, and capital to be able to sort of do more things.
Absolutely. And how much of that, Abhi, will be focused on building great technology in terms of taking the story forward? Because, you were talking about companies doubling down. Disruptions have meant that tech will have to obviously come to the rescue. How important is this going to be going forward, and how much of this funding do you think will be spent purely on this front?
Yeah, the ideal situation is that we spend nothing more on technology, right? But obviously, I think we're going to start templatizing for nuances for different industries, building low-code abilities for different industries to just spin up Pando and go live in as low as a quarter. A lot of sort of forecasting models that continuously need to keep evolving for both demand, supply, pricing, different models that need to come through. So I think a lot of investment in that area, but I think we're going to be focusing on expanding our global delivery and marketing and sales teams as well.
In terms of an outlook on the magnitude of funding that you're looking forward to, any ticket size for your Series C round of funding?
Yeah, I think just with this funding round getting done just now, I think we're focused on the ticket size of the next deal and the amount of value that we can deliver to customers. So maybe on that front, we currently, our ACVs, our contract sizes, are about $300,000 in North America, $100,000 per customer in India and in Asia. And so we're looking to expand that. And a lot of our energy is focused on.
And what's the number that you're focusing on in terms of expansion?
Yeah, it's interesting because these are large global businesses. And like I said, they expand from one geography to another, one business line to another, and so on. And so really the long-term value or the lifetime value of these businesses runs into millions for Pando. We're not even scratching the surface in terms of either the amount of value that we're delivering to these companies or in turn the revenue potential or share of wallet that we're able to get as a consequence. But, it's tracking, right in towards the, the top. So we're hoping that in the coming year to 18 months, we'd be able to double from 100 to 200,000 in Asia, from about 250, 300 in North America to about 600 to 700. We're seeing early signs with some customers expanding closer to 1 million now. So hoping to continue on that trajectory.
And last question before I let you go. I'm sure plans of going public would be something on the horizon, especially in the medium to long term?
Yeah, absolutely. I think the way we sort of think about it, we talk about it a lot at Pando, that we want to build a business that sort of outlasts us, that we can be proud of and create a legacy. And in doing so, I think the only way to do that across a long-term horizon is really not just to build a big business, but to build a good business too. And so, I think the IPO plans will be crafted around the time we hit $150 million in ARR. And at the current growth rate, that's about 3 to 5 years out.
Well, that was Pando outlining its future growth plans. Time for a quick break. Up next, Masai School has placed over 3,000 students in 1,000+ companies in India. We take a look at the company's growth and future plans on the other side.